Andrew, thanks for coming,
Yeah,
man.
awesome to be here.
We should have had you on a long time ago, honestly. You guys been doing a lot, Satoshi Energy. We'll get into that, but yeah, just starting off, thanks for coming, dude.
Awesome, yeah. Long time coming, but hopefully I'll be back too.
Yeah, yeah.
We made it. What is Satoshi for people who don't understand?
What is it? Yeah.
Yeah.
Well, I give the whole backstory, but in short, with what Satoshi Energy does, we help energy producers provide sites and power to Bitcoin data centers. And then on top of that, we're providing software now to optimize those power contracts.
Okay.
So the site development work is largely with renewable energy companies identifying wind farms and solar farms that have negative pricing curtailment opportunities to co-locate a data center. So we go through the full development process with them, land leases through the whole interconnection process, which has obviously gotten more complex and changed a lot in the ERCOT market, and then structuring these multi-party power contracts. And then typically we'll run an RFP and bring in a mining company. And then we'll continue to service that power contract as it's operating. And I think, as you guys are probably aware, there's a lot of like credit and collateral challenges in those projects. So, building software to do real-time settlement and provide some collateral relief.
How can you expand on that? Because I've heard a lot of different people talking about opportunities to kind of reduce the collateral burden on the miners. Like how's the software going to work? Is it similar to like Sonota?
Yeah.
Yeah. Okay.
Yeah.
Okay. So
I like to say they're similar to ours, but
all right.
it's a good like friendly competition.
Co-opetition, like that's rampant throughout the Bitcoin industry. We're a small industry, like people are going to have similar stuff and bump into each other a lot, but there's also so much work to go around that I think it's probably going to work out for everybody. But so that's basically kind of the same concept, like you're clearing settlements daily.
Yeah, I mean, there's a lot of ways to tackle credit and collateral in these power contracts. So what we've seen early on, before there was really much of an appetite for real-time or daily settlements, was just these energy companies. I mean, you're putting in a 100, 200 megawatt data center into your portfolio of retail sales. That draws a big red flag with the credit team. If those bills go unpaid, then they're on the hook for that. So typically we've seen like performance securities and big monthly prepayments. And that's just to cover like the accounts receivable risk, let alone if you're trying to hedge, then you have even bigger buckets of collateral that even real-time settlement doesn't solve. So it's just massive collateral amounts that are required for these data center companies. And as you know, they're all trying to grow and they need that working capital. They'd rather put that $5 million towards building the next data center or growing their team.
Yeah, I think it's probably the biggest barrier to entry for a lot of groups.
Yeah.
So especially at scale, but sorry, go ahead.
For sure.
Yeah.
So at least to solve the accounts receivable risk, like if it's an index contract and they're just paying based on what the real-time price is. What we can do now is provide daily USD settlements. So we're tracking all the energy consumption in real time, the prices, obviously, all of the different line items to the power contract, producing an invoice in real time, and then with USD doing a daily settlement. You can do it faster with Bitcoin, obviously. And there's all kinds of like, you can do BTC to BTC, BTC to USD, or just pure USD settlements, which gets the energy company a lot more comfortable with that risk. It eliminates the risk. So then they don't require as much money for collateral or prepayments.
But they're still requiring some level, right, of collateral?
Yeah, it's this ongoing negotiation. The industry has gone in so many different directions in the last few years. So like there weren't really settlement products a couple of years ago. It was just these big prepayments. But then as the industry has grown, the Bitcoin data center industry has grown. Like initially the energy companies kind of got comfortable with their, first projects that they're doing with these Bitcoin data centers. And then you start to add more to their portfolio. And so they've actually started, increasing their fees, increasing the collateral amounts to continue to protect against that risk. But now there's companies like ours, companies like Sonota. There's like probably 3 or 4 others also in the market trying to do this real-time settlement game. And so that those energy companies are saying, okay, like this is a nice solution. It's still very much in like the pilot phase. And we want to do this, but we need to get alignment between our origination team, our sales team, and our credit and risk team, and our operations team, and our executives. And
it's a lot harder than what it's. Yeah. It's like,
so they have to like understand it. They have to see it working. And then they can start to think about how do we take these collateral amounts down to like, ultimately it should be zero.
Mm-hmm.
How much are they requiring now without a solution like this? I want to like quantify, because we keep talking about it, but I have really no clue like how big is the problem.
Give an example based on like 100 megawatt load.
Yeah, so 100 megawatt load.
Sorry to throw you on the spot.
Yeah,
Andrew,
no, I'm doing math already today. So 100 megawatt load, typically they're going to be asking for like anywhere between 1 and 6 months prepayment for just an index contract, like plain vanilla real-time power prices. And so that might be a couple $1 million a month on the power bill. So at a minimum, that's upfront, held in escrow.
So 6 to 12 million is a good.
Yeah, over the term of the power contract, and you think about a 5 to 10 year power contract, and what's the value of those dollars at the end of 5 years or 10 years?
Well, and then you think about the Queasy too is going to have a lot. You got to put up for as well, right?
Well, it's generally that's what I'm referring to.
Okay,
our deals are a little bit different. You have a wind farm in the deal with some amount of collateral, and then you have a retail electric provider / Queasy also requiring collateral. But typically, like one of those two parties will take on the credit risk, the exposure with ERCOT.
Okay,
and they'll be the one requiring that collateral.
Yeah.
So all of these miners are throwing up millions and millions and millions of collateral per site.
Per site.
Per load, yeah, right. Like,
jeez, dude.
I mean, it's brutal. It's brutal.
So that's just the index contracts. The reason many data center companies haven't been able to hedge is because there's an entire mark-to-market risk that they have to deal with the hedge. So they have even higher collateral requirements for that, because it's not just about the accounts receivable risk. It's about like, what if this data center goes away or goes bankrupt? And now, like, since I've covered my hedge, I have to then go cover that risk. So it's even bigger collateral amounts and like daily margining, and
it's rough.
Yeah.
That's why those softwares that are kind of reducing the collateral burden it's key to these large scale mining groups, I think, for realistic growth. Because like you're saying, you take $12 million and you're setting it aside for prepayments. Like, that's all working capital that should be utilized for something else. So if you can kind of clear these settlements on a daily basis and get rid of the collateral burden on them, I mean, this is going to promote. Think of how much that is across the board for miners just in Texas. You know what I mean? Those collective dollars that get put now to mining operations rather than just sitting in an account somewhere. It's like that's a big deal.
Yeah, it's probably a couple $1 billion being locked up in collateral. Part of it. So a couple $1 billion locked up in collateral, but then you think about the amount of Bitcoin that these data center companies are holding, and it's closer to like, $100 billion that they're holding in Bitcoin, and they're not yet using that Bitcoin to solve this risk. So I think that's ultimately where we're going, is like, there's a big education component helping the energy company understand like, what is the nature of this business,
right?
Which, number one, these data centers are converting energy directly into money. And so these energy companies still don't understand this for the most part. They're getting on board with it, but like, there's still a lot of education that has to happen there. And then you have the technological solutions that can ultimately just wipe that risk out.
Are they able to collateralize in Bitcoin on the balance sheet?
We're not there yet, but it's happening.
Okay.
But you guys are basically taking their Bitcoin, converting it to USD. That the software is, right, and then settling those contracts in USD for the utility.
Yeah.
So, yeah, I mean, ends up being you're able to use your Bitcoin rewards to basically offset your collateral requirements in USD.
Yeah, which that could be like a instantaneous conversion from Bitcoin to USD. It could just be like their normal trading strategy of selling Bitcoin and holding some dollars on the side. Or they can just have a pot of dollars that they're paying energy bills with. And, we've also automated the USD settlement.
Is there any conversion fee if you're going from USD or from Bitcoin to USD? Like
just through the main exchanges.
Okay.
So
yeah, I was gonna say, who does it tie to? Like Coinbase or something?
We are in conversations with all the major exchanges and sort of other fintech type providers to do that.
Yeah.
And part of that is like, you don't want to have like a vendor lock-in there necessarily. And then also we want to get to volume to where we can continue to negotiate down those settlement charges, those fees.
Yeah.
To just take like, optimize every SAT in that flow.
Yeah, totally, man. So I know, and what I've known more about Satoshi Energy, sorry to shift so fast, but is basically your guys' putting sites together and kind of working with some renewable groups like wind farms or solar groups that are behind the meter and kind of building out large scale opportunities for miners. What you guys are still, that's probably your main focus of the business still?
Yeah.
Yeah.
So it started Satoshi Energy a little over 5 years ago. We did the first co-located deal in Texas to co-locate a data center with a utility scale wind farm. That closed in the beginning of 2022 and then became operational in like August of 2022.
Yeah.
So it was like neck and neck with a couple other similar projects that came online just after that. And
right on time for the freaking crash of everything.
Crash of everything. It was also sort of just ahead of the curve on the ERCOT Large Flexible Load Task Force. So we basically got in right before that. They did slap on some new requirements kind of in the middle of energizing that project. But yeah, got in just before that. And then since then, with the LFLTF and like lots of other changes in the ERCOT market, it's definitely slowed down a lot of our projects, but they take longer. But now we're at a point where we've got a few new projects coming to market this year, and the market's in a very good position. Ton of demand for power capacity, and energy companies are getting a lot more comfortable with it.
Yeah,
it's been exciting too in that few years. Some of these energy companies are starting to make direct investments in the data centers, direct equity investments. Even a couple of energy companies holding Bitcoin on their balance sheet now over that 2-year period. So a lot of exciting developments.
Did this one not have transmission lines, or did it have an excess power generation?
So the co-located data centers that we do, typically we'll describe it as a behind the meter interconnection, but really it's a sort of a hybrid approach. So you connect the data center to the same medium voltage substation as the generation asset. And so the data center can consume power from that wind farm or from that solar farm. But if the generator is not producing, they're able to pull power through the same point of interconnection, through the same high voltage transformer to continue powering the data center.
Are you seeing from the like wind farms, solar farms, are they, compared to when you first got going, how have they changed and I guess progressed in their viewpoint of like doing a deal with a Satoshi Energy to put, basically build out a site and bring in a miner? Has their attitude changed, like improved, and their education surrounding it? Like just overall, has their knowledge base gotten a lot better in regards to what you guys do and how it can be a benefit to them? Like when you knock on their door, they're like, oh yeah, cool, come on in. Or is it like, who, what are you doing?
I think the benefits always been pretty clear. It's like, okay, we're going to monetize your surplus energy. We're going to eliminate curtailments, eliminate negative pricing, improve your nodal pricing by having a large load there. That part's always been clear, but the Bitcoin market itself has always been a little bit taboo, and still is.
Yeah.
I think a few years ago it was definitely harder. Like, Bitcoin data centers were perceived as much riskier. I think the perception has definitely waned a little bit. But they still have that concern of like, what if Bitcoin goes to zero?
Man,
like, how do I deal with this?
They still have that
risk. They really do. I think we're starting to see like, with like, for example, the spot ETF approval this year.
I was just gonna say, do you think the ETF will change that at all?
Yeah, I think it's changed a lot of minds.
Yeah, I think they're starting to see that. Okay, this industry is not going away. Like I've heard that a few times this year, where it's like, okay, this industry is here to stay. It's not going away. And that's more so on the origination side. Like these are the sales guys who have to sell the power.
Right.
But then you go back to their credit team, and like there's always one person on the credit team who's like, they say magic internet money, but not in the good way.
yes, I've heard that so many times. Yeah. It's like, okay, the magic internet money.
So they say, what if Bitcoin goes to zero? The question I've been asking is like, well, what if Bitcoin goes to infinity? Then what does your business look like? What's the value of your assets? Like, do you have any exposure in this asset class? So I continue to challenge them on that and get them to understand that like, it's not only here to stay, it's like your entire life is going to be centered around Bitcoin at some point. You need to start learning it now.
I mean, I would argue that Bitcoin, the probability of it going to infinity is greater than the probability of going to zero at this point.
Yeah,
and
absolutely.
If that's the probability, like if you're looking at it as like a 60-40 type of deal, like you are doing a disservice by not throwing or allocating something to it. Just pure like logic would tell you that, I would think. But
The other question, like if when they say that, what if it goes to zero? Like, why even waste your time in this industry trying to sell power to these data centers if you think that's where it's going?
Right.
So clearly, somewhere deep down, they're like, they know.
That's true.
It's here to stay.
That is true. That's very true. We're gonna come back to all that, but we always ask this, and we didn't do it yesterday until a little bit later in. But so, what is your background and story, and how'd you get into being a Bitcoiner and all that?
Basically just a normal dude, public school education from Indiana.
I'm from Missouri. Yeah, we're neighbors.
Yep. Similar type of culture there.
Yeah, very much.
But so I started studying energy in undergrad. I did a study abroad in
Where'd
Australia.
you go to school at?
Purdue.
Oh, Purdue. Okay. Yeah.
So I did a study abroad, studied energy systems, and then ended up going straight to grad school to study power markets. So grad school was 2011 to 2013. Studied electric power markets at a time where, it wasn't as popular as it is now, especially with all the Bitcoiners coming in and trying to learn more about the market. And then also at that time, like renewable energy was it was like the black sheep in the energy space, like very similar to what Bitcoin mining is now, where they were all kind of fighting against the incumbent utilities and trying to deregulate and sell power into those markets. So it was a really interesting, learned from some really great people, made a lot of great connections there. And then shortly after grad school, I moved out to San Francisco, staying on a friend's couch. He was working on a Bitcoin project at the time, actually trying to pay like consultants, contractors in real time using Bitcoin.
Oh, really?
Very early on.
Well, I was
2014.
2014.
Yeah.
Wow.
So he shared a bunch of resources on Bitcoin. Once it finally clicked for me, just had this idea at that time, 10 years ago, that you have these power markets that operate on a 24/7 basis, buying and selling, trading power. But the money's moving much slower than that. And you have this digital financial protocol, Bitcoin, that enables, financial settlement 24/7. So that was the seed of the idea. And then just kept doing software consulting, some in the energy industry, some more broadly. And then like late 2018, started Satoshi Energy.
See, everybody else who got in this, I feel, is way smarter than me, because I was just like, "Oh, flare's bad. We could use a computer to get rid of that." All right, let's go do it. But it's like you guys got all these, like a thesis. I'm like, I don't know, man. I think we need to get rid of the flare. This will work. So
common sense always prevails. So.
I guess so. I mean, I'll take it. But yeah, that's cool. So what's your friend doing now that had this idea back in 2014? He's probably doing all right.
He's doing well. He's our part-time software designer.
Oh,
actually.
really? Okay.
Yeah, UX UI designer.
All right, nice. Yeah. So he stuck with it and stayed in Bitcoin. Because back then it was probably very difficult. Like we talk about how hard it is now. Like even when I got my money for Jay, it was like 2020. That was hard enough back then for that, and that's an easier probably explanation than what he was doing. And that's in 2014. So he stuck with it. Good for him. Yeah, that is good. So your projects that you guys are doing on a scale side of things, we were talking a little bit about this before. What we do at Adicon, it's probably similar in a lot of ways, more co-opetition. But we are looking at some sites too that, like, from basically small size all the way up to big sites. Have you guys kind of gotten into those smaller project size, or are you guys really kind of focused primarily on those large scale renewable sites that have opportunities to tie into the grid and all that?
Yeah, from a development perspective, we kind of learned after doing the first deal to do a co-located load at the utility scale that nobody else really wanted to touch that because of the complexity of it. Yet we found it, like, once we did one, like, we really learned it well and can do it well. So we very much focused on utility scale renewable power in ERCOT, and that's been our development pipeline since the start. I think this year we'll start to expand into new markets. We might look at some smaller sites, but I think what we want to do is try to do more of that co-location, but in other markets. And it's obviously, it's going to be much more challenging in other markets. Like, typically you're going to be dealing with a regulated utility in those markets. So it's going to be a slower type of, help them with the rate structuring to then attract the data centers. But I think it can be done. We just have to kind of take a patient approach, which is actually kind of similar to what we've done in ERCOT. We're working with some of the co-ops in ERCOT. And a co-op is basically a regulated entity, or or at least a monopoly that you have to like work with and be patient with. And so we've helped them design rates that work in ERCOT to bring in these data centers.
Yeah.
What's the size that you guys target? Like with the big solar one or the big wind one you were talking about? Is that 20 megawatts? Is that 100 megawatts?
Oh, that was a 170 megawatt wind farm.
Okay. It's big
it was actually one of the first wind farms in Texas. It was owned by Enron originally.
Nice. Oh, really?
Yeah. we were looking at the land papers and they had Enron's name on it. So that was pretty cool.
That's awesome.
Yeah. Are you doing anything internationally? Are you looking at international projects?
We poked around. I think there's definitely opportunity. I think politically it always gets challenging. Like having local market knowledge, it always gets challenging. But there are some big renewable markets internationally, like Chile or I think Argentina. Like if they deregulate their energy market, which is a real possibility, could be interesting.
Yeah.
Brazil is a massive energy market. They kind of just swung back towards communism, so we'll see how that works out. But they are deregulating.
So. Right. Yeah. I
can't win them all.
No, yeah. Okay. I really like I like some of the international projects, in particular in South America, just because I'd prefer to move somewhere like that and be able to chill and have a Bitcoin mine running. But I'm interested in groups and what they're looking at doing internationally a lot, just because it's cool, it's fun, it's a good story. But so the other guys on your team, I've been on the opposite side of you guys, but again, it's cooperation. It's such a small industry that you're going to be on the opposite side sometimes. But a lot of what you guys are doing does require you to kind of, I don't know, I don't want to say you're middleman because I don't look at you as middleman at all. You're facilitating a project getting put together that wouldn't happen otherwise. So but
it's like its own form of like being vertically integrated, right? From site to kind of the management and the optimization of the power, right?
Yeah, we're touching that from the idea all the way to the end of the term of the power contract for sure.
Yeah, and so when you guys go and decide what project to take on, like how long is it taking you to get to a point where the seller is buying in? Like how much upfront work is there for you before you can actually go and start marketing something?
Yeah, I think, what you said about being a middleman or not being a middleman. Yeah, a lot of these deals, they either wouldn't happen or they would take 5 years longer if we weren't there educating the energy companies on it. So, sometimes it takes a few months. They have a very clear need and they need it solved immediately. Other times it takes them a year or two to ultimately sell them on. What they do with us is we sign an exclusivity agreement to develop the site and then sell it to a data center company. So it's varying amounts of time. And like some of those IPPs, the independent power producers, are like still trying to figure out like where should we start in this industry, despite us talking to them for the last 2 years.
Yeah. Well, and that's so. Where do you guys sit? Where does Satoshi sit? Typically, you get them to buy in, and then you start, working the deal up. You get kind of some terms put in place. Like, where do you guys sit between the miner and the energy producer in the life of the deal? Are you guys staying in on that, like managing property or managing kind of the relationship between them? Like, are you guys involved, I guess, from day one to closing of the deal? And then afterwards, what's the relationship Satoshi has with like the mining group?
Yeah. So the two analogies you can pull from the energy industry are that we are a project developer and a power broker. So the development is, getting the energy company sold on doing the deal initially, going through that end-to-end development process to getting the project to being shovel ready, construction ready. So that's, modeling out the project economics for both sides, figuring out what PPA terms are going to make sense for both sides. As I mentioned, the entire interconnection process. So working with the transmission providers, working with ERCOT, working with the engineering teams at the energy company, structuring the power contracts through that process in a way that we know that's going to be acceptable for a data center company once we bring that to market.
Right.
And then basically once we have the project as close as possible to being construction ready, we then open that project up to various Bitcoin data center companies. They bid on that. Ultimately, one of them gets selected, ultimately by the energy company.
Right.
And then they sign the power contract. From there, we do some additional work to help them get from signing the contract to ultimately energizing the data center. We're not doing any sort of construction or operation of the data center. Like they're very much responsible for that. But we're helping to ensure that they get energized. And then once they are energized, they're fairly complex power contracts, lots of line items in there, multiple parties involved. So the invoicing process is, always somewhat complex, and we need to continue to ensure that people are getting paid on time and paying the right amounts. And so that's what we're doing from an ongoing perspective from the brokerage side of things.
Are you guys going and bidding power out for groups then? Like, are you a registered broker, I guess?
We are a registered broker, but with these co-located deals, at least, the structure, like there's a PPA with the wind farm or the solar farm, and then there's also a retail electric provider that they actually sleeve the power sale from the generation asset to the data center. But then for that front of the meter power that I mentioned earlier, where you're able to like pull in power from the grid, the data center is, the rep is involved in that too. So we're helping with that structuring. And then on top of that, you can start to, potentially layer in hedges, participate in demand response programs. So we're doing all the consulting around that. And then there's ongoing kind of like contract changes or market changes, or maybe you want to expand the project. So there's a lot of kind of ongoing work on the power contracts.
So it uses both the generation from the wind assets, but assuming the wind's not blowing, it's not generating, you're also pulling from the grid.
Right.
Okay.
Yeah. Do they, and I mean, they're probably running index, a lot of them.
Yep.
Right. Yeah. So
what is index? I don't know shit about index. What is index?
Buying a block of power, like say you got a 100 megawatt site, you can go buy a block of power from a provider, a retail provider or a wholesale provider, however you end up.
It's a block and actual like.
It's
units?
like I'm buying.
That's like
this,
a fixed price.
Yeah. It's like this is what you're getting your power for. I'm going to consume this much a day. Now, if you don't consume it, you can sell back to the grid. But if the price is lower than that, than what you're contracted for, then you're obviously losing money. It's like a take or pay. And but if you run on index, run naked.
The Texas hedge, Gideon calls it.
Gideon does call it Texas hedge. But so if you're running naked on there, you're buying index power. So whatever the market rate is at the time, just based on the real-time pricing, that's what you're paying. So a lot of groups, though, and explain the benefit for that, for somebody buying off a wind farm.
Yeah, so the actual structure that we typically do with the wind farm, we call it a price floor PPA. So if the nodal real-time price goes below a certain threshold, say $5 a megawatt hour, the data center is going to pay $5 a megawatt hour to that wind farm for any energy that is consuming from them. If that real-time price is above $5 a megawatt hour, say it's like floating around $20 a megawatt hour, and they're still getting power from the wind farm, they're going to pay that nodal price, that real-time price to the wind farm. So there's that basically a small block or take or pay component in the floor part of it. And the rest of it's an index contract where you're giving the generation asset what's called merchant exposure or exposure to those index prices, which basically that means like 90% of the power that the data center is consuming is index price power. So they're getting some of it at the node price from the wind farm and the rest of it at the load zone price from the grid.
Yeah, so basically locking in a price for the wind farm so they can if prices are negative, then the wind farm's still getting some revenue for the power they're selling, and they're getting cheap power. The miner's getting cheap power.
But to fully answer your question, so with an index contract, you're paying real-time power prices, as the data center, you're having to make a decision every 15 minutes, should I operate or not operate? And, in one 15-minute interval, your power might be $5 a megawatt hour. In the next interval, might be $200 a megawatt hour. And so you shut down. But your average price can be as low as, $25, $30 a megawatt hour with 90, 95% uptime. With blocks or with hedging, you can lock in a power price, just a fixed price, and also choose to curtail to sell that power back into the market. But for the most part, you have just a lot more predictability in terms of what your power price is.
And are you typically, if you're locking in that block, are you paying higher than what your average could potentially be?
Could.
Yeah.
But we get
so it is operating essentially
depends
as a
when
hedge.
you lock it in.
Right.
Yeah. Like if you're Riot and you lock in a hedge in 2021, a long-term hedge, they might have locked in somewhere around $30, $35 a megawatt hour. Maybe that price is lower than the average real-time price. But now, and especially after 2022, those hedge prices are much higher. So we're seeing closer to like $45 a megawatt hour.
Is that because of the natural gas prices
Yeah.
spike?
Yeah.
And so they just kind of get nervous about locking in hedges at that price. Is that?
Well, it's like if you're a Bitcoin data center, question is like, what price are you comfortable paying? And they're really all targeting like ideally sub 30 right now.
Yeah.
Definitely sub 40, and you can't really lock in a hedge
Below
sub 40 right now.
Yeah.
But you also have to factor in with the hedges, like when you sell some of that power back to the market, you're getting revenue from that too. But that part of it is the unpredictable part for the hedge agreement.
Right.
So it's like you would ultimately subtract that from whatever your fixed price is, but it's not a guarantee that you're going to get that revenue.
And if you're running naked, you can't sell power back. So that's kind of the.
So you can only sell if you
buy a block
index.
No, if you buy a block.
Yep.
Yeah. Index is running naked.
Oh, index is running naked.
Yeah.
Okay, so you buy the block, and then you can participate in the demand response programs
Yep.
and sell back and all that kind of stuff.
I think you can still get some demand response even if you're on index, right? But you can't sell power back. Those are two different things. Right?
Yeah, there's like the energy arbitrage of just shutting down and selling that power back into the market. And then there's all of the ancillary services programs. There are a couple of programs where you can do it on index without risk. But for the most part, like all of the more lucrative ancillary services, like you want to have that hedged, because if you're not operating when you need to be operating, then all of that cost is going to come back to you.
Okay. Yeah.
So that's one of the key differences. Like with an index contract, it's much riskier, and basically you're not going to do those like CLR type programs in ERCOT.
Yeah. Well, so what's the largest project you guys got online right now?
The largest one, the largest one is the first one we did.
Oh, really? Yeah.
And so that's 70 megawatts scaling up to 140 megawatts.
Nice.
And then we've got a 200 megawatt project right now that's very close to the finish line, should energize in the next few months.
Is that also wind too?
That's a wind farm, yeah. And then we have another 100-ish megawatt project that also is actually even closer to the finish line that should energize in the next few months.
Nice, man. So it's picked up.
A lot, yeah.
It's been good. Yeah. No, I've noticed it too. Everything's gotten a lot more busy. You got to take advantage of the bull market.
And then, so then you guys run an RFP process with various miners.
Yep.
And what are they essentially bidding on? Is it more of a vetting process than it is a bid process?
It's definitely more of a vetting process. In like I mentioned that price floor PPA, like they can bid on that price floor, and they have bid on that price floor. No Bitcoin mining company really wants to like bid in a competitive process, because they care. Like it's almost like if you win that, you're like the first loser because you've.
I'm paying more than everybody else was willing to.
Yeah, exactly. But
I've been on the other side of it. It's a very uncomfortable feeling.
Yeah.
I get. I feel like I'm running naked.
Yeah.
You know.
Yeah. But ultimately, like power capacity is more important. Like access to the interconnections is more important. That floor price component, and that's not the only structure we're doing, but it's been the primary one. That's like 10% of the energy they're consuming, and the rest of it's just buying index, as I mentioned. So yeah, it's definitely more of a vetting process, and saying like, do you have the financing to build this project? Do you have the experience to build this project? Are you going to be here over the term of the PPA? And so we help kind of build up a sort of a corporate profile for those data center companies, and then help the energy company understand who they're ultimately doing business with.
And so the energy company ultimately decides who they want to partner with.
Yeah. And it's really in these particular deals, it's specifically the generation asset owner who's making the decision. And then you can bring in different reps to sleeve that power, but a lot of times it ends up just being like whichever company was already the QSE on the wind farm, they end up being the rep for the data center.
Okay.
Yeah, it's a complicated deal.
Power's an entirely. I can talk so detailed and technical in oil and gas till I'm blue in the face. I give it a power. I feel like I'm a 3-year-old. Like it's
been even like I had a master's degree in power markets and worked in the industry for a while, but the deeper you get into actually making these deals happen, there's a lot to learn.
Yeah.
So I've come a long way just in the last 5 years.
Yeah. They're I get calls a lot and emails a lot about like, can you handle the PPA? Can you handle this, rep and QSE agreement? Can you handle it? And I'm like, some of this stuff you got to take to people that is, it's very specific. You know what I mean? It's like this is all they do. And you don't want them doing the entire agreement, but you want them certain things in there. It's like, unless you do this every day, It is going. It's beyond the capability of like just somebody picking it up and trying to figure it out. It's not an easy thing to understand at all. So
our first outside counsel, she basically helped design the ERCOT nodal protocols and deregulate the market in the late 90s, early 2000s.
Yeah.
And it's like, without people like that, you can't make these deals happen.
Yeah, you have to have somebody that has experience with that. And I should give a plug for my new law firm.
Go for it.
256 Legal. I just announced it today. But
it's a great name.
Yeah, I know. Who came up with that?
I don't know. Must have been a marketing genius.
Marketing genius guy, I know. Mr. Jay Corley. He's gonna get the first shirt.
I don't know which one of these buttons is like the clapping and cheering. Let's see.
Try
Yeah, no, it was a great name. But yes, we Rachel Silverstein is my partner over there. She was a GC at a Clean Spark. I'm still Atacom's GC, but just got a lot of stuff. We got to take advantage of the bull market. So
a lot of opportunity out there right now.
Yeah. So we can handle all that stuff, but we still will go and secure somebody like the lady you're talking about to look at the very, in particular, specific things that require somebody that's done this stuff on a day in, day out basis.
Well, keep plugging this because I'm actually interested to learn. So what are you focusing on versus what is she focusing on? What's her expertise?
Well, Rachel's done a lot of PPAs. I've done some. Most of my experience initially was off grid, and kind of all the things you entail in that just because of the oil and gas background. Obviously over the last like 2-3 years, though, I've gotten a lot more on grid experience. So a lot of mine is transactional and putting deals together. Probably similar to like some of the stuff you guys did, but I was doing it from a legal arena rather than kind of an infrastructure, participant. And Rachel, she was in-house at Clean Spark. So everything entailed from a public miner's perspective, like she's handled basically all those kind of issues. Yep. So, and she worked for a utility. She was a GC for a utility for a little while. So she's covering a lot of that end of things. And, I handle a lot of the transactional stuff. So awesome. Very complementary to each other. And we're probably, and just on the feedback we've gotten, we're probably gonna have to bring a couple other people in pretty quick to handle some of the workflow. Just a lot of stuff, man. There's not a lot of law firms out there that have done much in the Bitcoin arena, in the mining arena. So
what's your Bitcoin per hour fee?
It depends on what we're talking about. But we're around 350 to 375, and depending on what.
That's dollars, right?
Yeah, dollars.
Okay.
Yeah.
375 Bitcoin.
Bitcoin per hour. But depending on what it is, like there might be some DD stuff that we'll do for cheaper than that. And if it's very technical stuff dealing with like ERCOT and all that, we probably will go engage someone else. So then that's just kind of a pass through that we'll pass on to the clients. But yeah, we're cheap for what experience level we got. And yeah, so
cool.
Yeah, give us a shot, man.
Yeah.
Here's a random question. What's something that nobody's talking about?
Yeah, where do you think we're going to from here?
I don't know.
Start with his, and then I want to know, because I've got feelings on like the market coming into the halving. Obviously, there's a lot going to go on, and we should have asked Taylor that yesterday too. Kind of what's their thoughts on how they're going to handle the halving. They don't have as much of an issue, I think, because of the hosting. They don't host, and so I think that's one area where I'm very interested to see what happens going forward. Is like the hosting contracts that are out there. How are we going to what kind of, results are we going to have once the halving occurs and some of these contracts are upside down?
I've had somebody describe, they went to the Jackson Ski thing, and they said that the vibe was, this isn't the exact thing, but it was something along the lines of suppressed optimism. Like everybody's excited with where we're at, but also with like the impending halving, and it's like, it's suppressed.
Yeah.
So I'm curious from your perspective, like, because I think a lot of times we get caught up in this echo chamber, right? It's a small, intimate group. We all talk about a lot of the same things all the time. So what are the things that nobody's talking about?
I'd say there's like a whole herd of elephants in the room right now. I think everything going on politically, economically, spiritually, even in society is like going to impact business in some way. Obviously, Bitcoin is a big part of that, kind of ideally taking society back to a sane base point.
Yeah.
I think with Bitcoin, I don't know if nobody's talking about it, but my perspective is that like we're at a really challenging time with the bottom up growth. And I think from like we need more of the top down leadership, people who are energy executives or sort of like political leaders, but more like market oriented political leaders talking about it, other business people talking about it, people in media. Like you have the mainstream media, and there's maybe a couple people in the mainstream media who talk about Bitcoin. And then you have the alternative media, but a lot of like the big voices in the alternative media still don't really understand Bitcoin. And it's really hard to continue to get that bottom up adoption or just like everyday person adoption until you have some leaders who kind of say, hey, this is a safe thing to invest in, to learn about, to use as money ultimately. So I want to make sure like people keep, the executives in the room keep understanding it and learning it so that they can tell their people that work for them that like, hey, like this is something we need to focus on.
It's mind-boggling to me that there haven't been more leaders that have stepped up. Obviously, people like Saylor have been extremely vocal, but like if you're leading one of these large companies, you're generally a pretty intelligent person, and it's not a difficult concept to understand. You go read the Bitcoin standard and it's like, this makes sense.
Right.
Absolutely. Even not even reading that and just having basic conversations just to like actually dig in and understand like what Bitcoin is, it makes too much sense to me. And then once you get in, there's no going back. Nobody gets like
orange pilled.
Orange pilled. Yeah. It just doesn't happen.
You don't go back.
And so I don't know if it's like this just not wanting to stick your neck out and be wrong about something. Like, I don't know if there's like this timidness around that due to the fact that it's like, well, I don't want to like, I don't know, I don't understand it, so I'm scared of it. But it's like, I don't understand why more people aren't rolling up their sleeves and like digging in and educating themselves.
I think it's a lot to do with just the way everything's always been done, and people get in they get stuck just doing what they've always done. And it's hard to look at something that you've trusted and you've been told like, this is how much you put in your 401k. This is what you need to do after school. This is, you have all these steps that we're kind of programmed to think we need to do, and to go do something that's totally counter to that, it gives you a lot of unease. And then when you factor on top of that a lot of these executives are talking 30, 40 years with the same mentality, the same practice, everything's worked for them to get to the position they are in. And then you bring them something like this, like Bitcoin, and tell them that this is the future. And it's like, well, it gives them a lot of unease, I think, about something that they don't understand. They're not real clear on it. For them to then drop what they've done to get themselves in a position they're in to go into this new thing, it's intimidating for them.
In politics and in the financial sector, it's like, oh, well, the future that I've been working towards is not the future that I thought it was going to be. It's actually so much better.
Right.
But it's like, it's a hard pill to swallow to be like, oh, wow, like this is a massive paradigm shift in the way that I think about the future.
It's the same thing when it comes down to like, you look at societies over the history of the world, and this is where I start. You mentioned spiritual. Like I think I'm totally agree. I think there's a huge aspect to that goes into like where we're going and what's happening right now. But no one ever thought, the Romans didn't think they were not going to be the Romans forever. The Greeks didn't think that. The Egyptians didn't think that. Nobody ever thinks.
The British Empire.
Right.
Right.
Literally, time's up.
The entire globe.
So it's like when we're telling them that, like, hey, this is coming, no one believes it because it's not comprehensible for us. Like we look at everything in these time scales of like 100 years is a long time. That ain't very long. Yeah. Like not in reality. It's not very long. I mean, I've seen different things about how far we're removed from like, I think it was President Taylor or something. His grandson just died. Like, this is not that long ago, you know what I mean? Or maybe it was even his son. I can't remember what it was, but it's time to us in our daily lives is very different than the reality of what time is. And so like we are going to have an end at some point to the financial system. I mean, look at the history. It will happen. It's inevitable. So I look at it from that perspective. I'm like, I very much think there's a spiritual aspect to this and understanding our role in the universe and in time. And it gives me a lot of comfort then where I'm like, man, number one, don't worry because you can't control it. There's nothing you do. Memento mori, we're all going to die. Just position yourself and your family for like...
Dude, historically, wilder shit has happened. There's actually been this there's been this image that's been going around social media that's kind of like blown my mind a little bit. But think about this. You were older than all of the founding fathers of the United States of America whenever they founded it. They chose...
Why you got to bring that up,
18,
dude?
there was like ages 18, 20, 24. Like the oldest was, I think Ben Franklin was 40. Ben Franklin was 42. You're Ben Franklin.
Oh my gosh.
Yeah. And everybody was everybody else was in their 20s. You see how old he looks?
That's awesome.
But see, that's the thing. I was talking about this with Sarah on the way in. And like, man, my dad, like right now, is the same age. My grandpa was the same age my dad is right now when I first got married. And I'm like, he looks so much older than my dad did. And then I would think how my dad looked when I got married. He looks way older than I look now.
Yeah.
So Benjamin Franklin, I don't give a shit if he's the same age as me now.
They went through some hard stuff.
He looked way older than me. I do not look like Benjamin Franklin.
Yeah.
Damn it. Oh, okay. Sorry. We sidetracked.
No, it's all very relevant. Like life is short unless you know how to use it. And so you mentioned that, these people say, this is the way it's always been done, but that's from the perspective of your lifetime.
Right.
Which you also mentioned, like the larger historical context for sound money and fiat and the ills of fiat money. So I think people need to just take a deeper look at history about, what's actually happening.
Right. Because the reality is we're in the system that we're in right now, really 50 years.
Yep.
That's it.
Yeah, that's right.
That's not very long. So like when you say, this is the way it's always been done. No, it is not at all. Like we're past the way it was always done. And the last 50 years, I mean, shoot, my dad's, I'm 43.
I think not enough people ask questions or are not curious enough. I mean, like I discovered very early on when I started working at 15, I discovered very early on that I wanted to be an entrepreneur because it was like, okay, I'm trading an hour of my time for $8 an hour. I was like, that's a pretty shitty trade because I value my time so much higher than that, but I had no skills when I'm like 15 years old. Right?
Yeah.
And then you start to, you hear these things of like, oh, just do the 401k and just do that. And you start to reverse engineer. That's what I did when I was young. I was like, reverse engineer the life I wanted. And I was like, well, none of this makes sense to me.
Yeah.
I even had a conversation with my dad. My dad is like the quintessential by the book, police officer, pension, 401k. It's been preached my entire life. Up until recently, I think I was perceived as a failure for like not finishing school and like all these things. And I think he's changed his mind a little bit. But like I had a conversation the other day and I'm like, Dad, like Bitcoin is like the retirement for our generation.
Right.
And he was the first time he finally admitted, he was like, I should have listened when you first told me about this. He was like, because my retirement would be sitting fucking super pretty had I just listened so much earlier.
That's an awesome way to frame it. It's the 401k for our generation.
Exactly.
Right. Yeah,
that should be the way you do it. Because
or the pension for our
you
play
play out a pension, you play out a 401k, and you sit down with somebody, like do this. Go sit down with somebody who's doing retirement planning or already has a retirement and ask them to be open kimono about what those numbers look like. And you'll realize that half of them are sitting on the poverty line.
You're going to have to make them show what it would be had you invested in Bitcoin.
Especially with inflation, like the money just doesn't
it doesn't make sense. When you got inflation outstripping the average return on a 401k, it's like, well, that you're losing money.
People are like, why didn't I would actually be 3 years away from retirement in the Marine Corps had I stayed in and just done it. But what does that get me? $40,000 a year. That gets me nothing.
Oh, nothing. Yeah. You think about that 20 years from now.
Yeah. What does that get you? Was it gas money?
Right.
For free people.
Right. Yeah, man. I don't know how we got on all this, but that's this kind of stuff that, to me, it's such a no-brainer. But you do have a bunch of financial advisors that'll sit there and tell them, no, you don't want to touch that. You don't want to. I was in Canada last week and talking to some of Sarah's family. Do what?
Sorry to hear that.
I know. Fishing was incredible, I would say. But I was up there talking to some of her family, and somebody had told me like, oh yeah, he's in Bitcoin stuff, and this, these guys are like, I'm not doing that. My financial advisor told me that you can't touch it; it's too volatile. And I'm like, I don't even try to like convince people anymore because it's like, man, whatever. Like if you're not gonna do it, that's more for me. Okay, fine.
Yeah.
But that's kind of the mentality that you got to deal with, and I mean, that's going to go away with time, obviously, but it's just sad because I look at it, I'm like, man, things are so different than what you think they are. And I'm not going to sit here and pretend I know the future and I know all what's going to happen. Like, there's a lot of things that could happen that would rock my world and shock me. But one thing that I do feel very confident in is that the system that we live in right now is not sustainable. I think that we have plenty of people that are even in power that are telling us that, but we just ignore it and pretend that it's not ever going to happen. And we get so caught up in our day to day that
you're gonna see a fucking coup happen, because if you break it down, like, most people cannot afford. You see it play out on Reddit. Just hop on Reddit. Go look in personal finance and people who are like, I don't know how I can even afford anything.
Making good money. Like the salaries that you can make now, if you were making them 20 years ago, you're high hog living.
Feed your family, own a house,
right?
Own a car, 2 cars maybe.
I know a guy who's really well off was posting about his insurance premiums have like 6x on his home. They want him to, I think it's like 3 times the value of all of his home and all of his assets is like what his new premium is going to be. And he was like, this makes absolutely no fucking sense.
No, it doesn't.
Insurance is going up. Like, used car, because I'm in the market for a truck right now, used car interest rates are 11 to 13% on average.
It's crazy, man.
Nobody can afford anything.
No. And like 11 to 13% interest, you're not making that on the market. Although the people that are having to pay that are not making that much on the market.
And more people are defaulting on their auto loans than ever before.
It's the next bubble, man.
It's the next bubble. Just like we saw in 08, but it's actually much, much bigger because you had all these subprime loans. The average car payment right now is $1,200.
Oh my gosh, dude.
Right? They're doing no income verification. They're just like, these dealerships essentially are the ones who are using so if it's Dodge, Chrysler Finance is the one who's doing it. No verification. They'll sign anybody up. They'll sell anybody a vehicle.
So same for power bills right now. Like, people are not paying their power bills. The last numbers that I saw was maybe from a few years ago. It was like 17 to 20% of people are either late or not paying their power bills.
Really?
And you can only imagine it's probably gotten worse in the last 2 years. And that's, I mean, that it doesn't work in a regulated market, and it doesn't even work in a deregulated market to have people can't afford their power.
Right.
Like, one of the basic necessities.
Yeah.
So.
Meat prices keep going up.
Everything's going up. I gotta buy a cow though too. I'm due. I've finished off the last one we had. So, yeah, it's time.
Nice.
You ever buy a cow? Half cow, full cow?
When I was growing up, we used to do that. But now I go straight to the rancher. I don't ever buy a whole cow because I don't have a freezer big enough. And I move around so much. But anywhere I'm at, I try to find a local rancher, get grass-fed, grass-finished beef. I always talk to them about Bitcoin if I can.
I do too, man.
It,
but there's that whole beef initiative. It's more just because like from a lot of this is all like-minded people kind of mentality, and like I go Law Ranch is where I'm at.
Yeah, I want to build a little ASIC backpack that you put on the cattle. Yeah. And you just kind of plug into their natural methane issue that they have in all the cattle.
I think Steve Barber already patented that.
Did he already do that? Dude.
Of course he did.
He's definitely been talking about
it. Steve, I want to buy one.
Yeah,
we actually not one. I want to buy a bunch for every single one of my cattle.
There's
just walking around with these cool little backpacks, just wearing.
I like it.
Put a greenhouse on top of them too, for the waste heat.
Did you hear the episode we did with Steve Wood from Merkle?
No, I actually a little bit of it, but not the whole thing.
He was talking about the stuff they're doing with greenhouses and all that. That's the other good thing I like about Bitcoin so much is the innovation on like every idea. Shoot, I don't want to give her idea away, but then talk about Sarah again. But she's doing work with a group called Rescue America, and they do like they help get people out of like sex trafficking and sex work and all that. And she had a really good idea about how to incorporate Bitcoin mining into even that to help on kind of raising money for it, but also running some of these houses that they bring some of these women out of and kind of like house them. It's really, I was like, damn girl, good idea. She ain't even been in Bitcoin that long. She got all kinds of little ideas, throw some mining stuff involved. Like Bitcoin could fix everything.
Yeah.
Even sex trafficking. So,
let's hope so.
Yeah. But sorry, Andrew, we derailed that a little bit.
No, we brought it a little bit back to energy. I think these are all very important topics. And I spend so much time in energy and talking to energy people and getting a lot of like, just kind of like sunken faces when I talk about Bitcoin.
Yeah.
But I think the bigger, like deeper societal impact is super important to talk about and something I always enjoy talking about.
Well, we enjoy having you here, man. We need to see how Adacon can work with you guys too.
Absolutely.
We need to find some ways to do that.
Yep.
And we need to find some ways to get 256 involved with you guys too.
Cool.
This got me thinking about that new Civil War movie that's about to come out.
Oh, dude. I saw
this. It looks pretty sick.
Yes. I haven't seen the preview for it, but I read an article about it. The reviews are incredible. Yeah. Like everybody's like, did you hear about this?
No.
You should see, look at the trailer. Like that's what's coming if things don't change.
It's a modern day, like
it's like Nick Offerman's like a third term president, and then like Texas and California, which is a weird alliance, secede, and it's like versus the rest of the United States.
Oh, really?
It's like Kirsten Dunst is in it, and then the guy who played Pablo Escobar in Narcos is in it.
Oh man, I want to watch it.
There's a bunch of big names.
Yeah,
it's about to come out this summer.
I read about the reviews. It sounded awesome, and it is, man. It's another one where people are like, "Oh man, it'll never happen." I'm like, "Yeah, it's in."
With the border stuff that's happening.
Know. Yeah. You don't know. There's a lot of things that could happen.
I'm totally good with Texas just breaking off and becoming the best country in the world again.
Where's our tinfoil hat, man?
I know. Where's our tinfoil?
Yeah, we need them.
Andrew, this has been awesome. We'll have to do it again sometime.
Yeah, awesome.
Thanks for coming, man. We appreciate it.
Yeah, thanks for having me.
Smash that like and subscribe. Catch you guys in the next episode.